Snipers, you have to see what's happening to the Bitcoin price this Wednesday as we are still fighting at this $46,000 level where we have the 200-day moving average already seeing two wicks below this level. We also tested the 50-day moving average with today's candle down at 44,400. And notice that when we go into the 4-hour time frame, as I talked about yesterday, this $46,000 level is extremely important, and we've yet to really see any decisive 4-hour candles indicating that Bitcoin wants to move away to this higher range above the monthly open, sitting at this $47,000 level. And so we have to realize that when you come to a specific area and you start to have a cup of coffee, that means it's not the final destination. And so you typically either continue in the same direction or you start to see a reversal, and you'll start to see the early signs of that based on the micro time frames, because everything morphs from the smaller time frames into the larger time frames. But we've yet to really see Bitcoin say, okay, that's it, 44,800 is where I want to turn around at, because we don't have any decisive candles here above the $46,000 level on the 4-hour chart. And so I want you guys to realize that some people are saying, is this an opportunity to buy in? We'll realize when we go into the 6-hour chart, where institutions love to imprint their volume versus the other 4-hour time frame, 1-hour time frame, and more popular time frames, there's a massive institutional sell order here that brought us down with this 19% candle to the downside, and we have yet to see buyers equate to that. So we really have to ask ourselves a question here, and that's the fact that, is this a good opportunity to get into Bitcoin, or is this a good opportunity to take a step back and cash is a position, and to just kind of say to ourselves, all right, there's a lot of risk here. If we come to short this area at this 200-day moving average, there's a high chance that we could see a bounce up, and that wouldn't be a good play. The short opportunity was here above the $50,000 level. I took a short above 50,000. We took a short on Ethereum at around the $4,000 level, and that was great. We could continue to short. However, until we get a confirmation of what Bitcoin wants to do here, it's a very risky place to be, even for the long side, because understand this, we have two candle wicks below the 200-day moving average, one below the 50-day moving average, and one today that tested the 50-day moving average at 44,400. And so it's signaling that there's some downside pressure here. And we know that we've had a tremendous rally, about, I'd say 80% rally to the upside. If we were to calculate this just from when we really initially saw the B-word event into where we're at now, 81% to the upside. Is it time to see a push to the downside for Bitcoin? And if that's the case, what would be the downside targets? I've been telling you guys this. If 49,700 breaks, when we were above 49,700, I said if it breaks, I don't expect this to be a light break. And that's exactly what happened. We pretty much came down to 41,950, right? And so the real downside target now, based on this candle here, this reversal candle is the best way to put this. You can call it a top candle. I mean, this is a 19% candle to the downside before Bitcoin had the chance to get to new all-time highs. So we have to be careful here, because this could potentially be a lower high forming, right? And so that's really the concern on the long side, because if we start to see Bitcoin cross below these other moving averages, now we have this area of confluence with this market structural resistance that held Bitcoin down from the drop in May all the way to the end of July, where we started to move away from it. And there's confluence here with 34,788, 36,500, 38,000. So to assume that a weak Bitcoin at 46,000 could potentially see further downside, I would say the first area of interest for me as a target would be 38,000 to 34,788. Now, here's what I think the problem is with that. Understand that short-term price action can be controlled by everyday retail traders and institutional traders in the market, right? Primarily institutional. Macro, you can't necessarily do that. And so if this here ends up being the corrective wave where you pretty much got to the golden zone, if we were to pull up the Fibonacci, this is the golden zone here based on the retracement from the $64,000 to $28,000 level. This would be the next impulse that could potentially even bring us below 34,780, and then we can even test this macro support level where it dates back to the March drop. And notice how it held Bitcoin at the $10,000 range from the March drop, and then we come back down potentially. We don't cross below previous all-time highs. It goes in line with the thesis that Bitcoin will not come back down below 20,000, but coming to 23,795 at the end of a bear market is a very big possibility if this right here is a lower high. And that's where I see the concern at this exact price range. I believe it's a no trade zone just for the time being. This will change in 24 hours, possibly in 48 hours. But until we can start getting some confirmations in the micro timeframes that 46,000, the 200-day moving average, wants to hold as a support, then we have to keep this scenario in mind and not get fooled at these levels in between at 41,950, 38,000, 36,500, 34, because this is where the institutions take advantage of retail traders. They bring the price up, they change the sentiment from bearish to bullish, and then everyone's bullish on the next move down, and they start entering in and accumulating at these higher levels, and then smart money will come in at the actual accumulation zone, which right now it could certainly be that $25,000, $24,000 level. And so keeping this in mind when it comes to a macro sense and the importance of what we're about to look at in the micro timeframes is what I want this theme of the video to be. And then we're going to cover the rest of the markets because we're four-dimensional on this channel. We predicted the DXY pushing up was going to push the crypto market down. That's exactly the reason we've seen this push down. And so we're going to talk about traditional markets like that. And then Ethereum, of course, once again, I'm going to bring this chart back up, doing some very interesting things that we could really dissect because we're following the rules of technical analysis. We rejected this channel resistance that has been long standing here, especially for those that have been watching the Snipers channel before Ethereum even crossed 700 US dollars. We've been watching this area here, and then we also rejected 39.59, another lower high potentially here. This looks like a top here. It just does. I have to be honest. Are we going to get traders fooled all the way down to the 1980 range? Is Ethereum possibly not going to come down to form new lows to where we previously saw Ethereum all the way down to 1760, just shy of the 1440 previous all-time high? Maybe we see a higher low form in this next move down. I'm just bringing up the macro once again. I'm not being a bear. I'm not being a bull. We're going to look at the micro time frames. There's a possibility we could move up, but I'm just saying, with Ethereum below 3454, you have to be careful. The range is all the way down to 1980, and that's a concern because that's a very large range to the downside. It's a more volatile asset, and a lot of the hints of how this next move is going to play out. And one of the theses that we've stuck to on this channel, I'd say over the last month and a half to 2 months, is that Bitcoin dominance is potentially in the early stages of a reversal. And the reason I've been saying that is we saw a tremendous altcoin rally with this so far lower high that Bitcoin has formed. Notice how it correlates here with this lower high. And that's why we told you guys that altcoin season wasn't over here in May, because I believed that there was still some room to go, because we looked at the others dominance chart and we saw that we were testing a support for the first time, a macro support, which was previous resistance. And assuming garden variety market behavior, you bounce at a next test of a support for the first time. And that's what we've seen here. We're not looking at the others dominance chart anymore, with Ethereum being as institutionally graded as Bitcoin. So we're going to isolate Ethereum dominance now. And this is our new others dominance chart, which is the top 100 coins minus Bitcoin, Ethereum, and the Tether and other stable coins. And so realize this, we also have a lower high here forming. And you can kind of see the opposite happening with Bitcoin dominance. We have this higher low forming, and it's a chart here, the Bitcoin dominance chart, which is extremely correlated with the DXY, the strength of the dollar. And a lot of that has to do, as I've talked about before, with the sentiment of where people and institutions want to head to their money. They don't want to be in more risk-on assets like altcoins that have yet to see true user adoption and so forth. They want to go back into coins that they know are strong fundamentally, Bitcoin and Ethereum potentially this time around. And so our thesis, which we'll talk about today, has been that if we see a move to the downside, this was the first time 2 days ago that we've been able to test our thesis here on the Snipers channel, that if we see this move to the downside, how is the other markets going to react? The other revolving parts going to react to that? And so far, our thesis against many analysts that I personally watch that have been saying altcoin season is up for a new rally. I've been saying that if we see this move to the downside, there's a potential that we see this reverse down. And what I've also added to this thesis amongst EIP 1559 and Ethereum 2.0 and futures launching is that for the first time ever, Ethereum could potentially act as a good hedge in a bear market. And let's just not take that too harshly. We could assume that if Bitcoin does not form any further all-time highs, we've been in a bear market. So the end is closer than the start if this is truly a lower high. So don't actually take that too harshly. You know, we've seen a tremendous rally. I don't expect Bitcoin to test any further levels below the previous all-time high of 20,000. And so no matter what happens, and that's stood true so far, but is Ethereum ready to see strength against Bitcoin now or later? That's going to have to be determined here with Ethereum and a Bitcoin chart, because so far everyone is going crazy about this chart, but we've done nothing significant other than double top at previous resistance. And so until we can see something different, I have to be the umpire and say garden variety market behavior says that until we can form new highs, this is just a push up for a lower high. Maybe we even can form a higher high. Getting above 86,000 Satoshis is where I would say, okay, now Ethereum is ready to perform against Bitcoin potentially for maybe several years and outperform. But until this happens, I don't think Ethereum is ready. It needs to get above 86,000 Satoshis if we want to assume that. We start to fall back to 65,000 Satoshis. This is going to start confirming our opinion that Bitcoin dominance, this would be the final confirmation, is going to move above the 20-week moving average again at 45% dominance. So first goes Ethereum to Bitcoin. If it sees downside, we want to monitor Bitcoin dominance. Now, let's say we isolate Ethereum and we see Ethereum do well, but other altcoins don't do well. That's why we're going to start watching this chart. There's also a possibility Ethereum moves in outperforming Bitcoin. Bitcoin outperforms the other altcoins, and now Ethereum and Bitcoin are kind of the two alpha players versus just having Bitcoin being an alpha player. They see liquidity flowing from altcoins, and then Bitcoin dominance could come back to the 200-week moving average, where it loves to stay, as you could see here in this more macro time frame on a weekly chart, while Ethereum dominance starts to see its time in the market where it didn't get that time in the 2017, 2018 rally, but this time around it could see, some upside. This Ethereum dominance chart is different than the others' dominance chart. We have to keep that in mind. Look how different they are. This looks like it's topping out at 36%, while the Ethereum dominance chart is in an ascending triangle. And so that's why we've started to isolate these. So they've been very correlated for a very long time, but this is really the first time we're seeing sort of this discorrelation with a very important level where we could potentially be in the midst of a breakout or a breakdown here. So a lot to talk about today, and then we'll look at traditional markets at the end. This might be a long video. It's already 14 minutes here through, but it's a very critical time in the market. So let's talk about the micro time frames that we were discussing earlier to determine. And you guys know the importance of 46,000 now that I've explained it to you. What is happening on the micro time frames? We're forming a lot of lower highs, and that's not a good thing. That means there's pressure to the downside so far. We could sit here and say, oh, we've got an inverse head and shoulder pattern forming here, but the fact of the matter is we're in a very critical transitionary phase where Bitcoin has crossed below the 250-day moving average and has seen an immense amount of sell pressure come in, and we have not been able to form higher highs. Now, typically when you make a move and you flag pattern, that means there's another continuation move coming. Are we going to be seeing this push Bitcoin down below the 200-day moving average? Remember, 46,000, there's a reason the price is there right now. One of my mentors in trading said, where the price is right now actually does matter. That's the current price of the asset, because in reality, as I think Charles Darwin or someone says, the future and past don't exist. They are merely just illusions. The present is all you have. That's why it's called the present. It's a gift. And when you arrive to the future, you will realize that it is just another present moment. And so the present is what matters. We're sitting at the 200-day moving average. If we start to see weakness now below, we've already got one bearish hourly candle below 46,000, we need to put on our seatbelts, because at that point, 41,950, there's not much more volume here. We've already cleared out the volume with this wick. This could turn into a push down to the $38,000 level. And that would be my concern if we stay below 46,000. And then from there, we could see some short-term price action to the upside. I talked about this yesterday. Institutional type of volume doesn't just come in all at once. They like to take their turns, because if they just came in at once, we just see the price come down like this. And so they will, slowly exit their positions, whatever it might be, to accomplish whatever goal they might have. And so we could see a potential, let's say, I don't know if we come to 49,700, if we cross below 46,000, but we could come to the monthly open back to the $47,000 level. And then we have to determine, okay, are we going to see strength here, or are we really going to see that push down to the new further lows for this year, where we could potentially find that confluent level on that macro support level around the $24,000 to $26,000 level? That all will have to depend on 46,000. That's the importance of where we're at right now. So I think that if we cross below 46,000, it's not the time to say to ourselves, okay, this is it. Let's buy the dip. It's time to be a little bit patient and realize that sitting on the sidelines is fine, and that cash is a position at times. And so we have to realize that for the upside here at this point, the monthly open has a lot of confluent regions and is the closest area of roadblock for Bitcoin to the upside. Is only 2% up at 47,000. If we can start getting candles at 47,000, this would be extremely positive for Bitcoin, because that assumes we come back to 49,700, at least to see, could we hold 49,700, or will it reject? When you reach a destination, you reach it and you turn back around, right? But at times you do reach a destination, you have a cup of coffee, like we did initially here with 49,700, and that's why we were monitoring the micro time frames throughout the last few weeks. And then I said, I don't see strength here. And of course, we saw the weekend manipulation of the upside and the push down. And so, having a cup of coffee gives you some indications of what's happening, but that's when you have to start being a little bit more micro, time frame, and look at the smaller time frame. So we get above 47,000, then we can start talking about some upside to 49,700, and then we have to see Bitcoin's reaction to 49,700. But if we cross strongly with decision and with intention below 46,000, I would be extremely careful, and we could potentially even look at 38,000 as a target. So that's just the truth of what I'm seeing on the charts. And that would also make us test the 100-day moving average, get slightly below it, and then I think we could find some buyers there, at least in the same amount of sellers. And then with Ethereum, my concern here with Ethereum is that the range is a lot larger in downside. And so if we stay below 34.54, we could assume 1980 is going to come back at some point. And so that's hard there, And so in the micro time frames, it looks like what Ethereum is waiting for is to see, can Bitcoin reclaim the monthly open? Because the monthly open for Ethereum is also sitting at 34.54, which is not a coincidence. So you have to kind of look at them in the same way, where we know Ethereum will be affected by Bitcoin. And so it doesn't have that much independence just yet in this market. And so if Bitcoin can get above 47,000, we can assume Ethereum can push back up to 36.50 first, and then 39.59 as the next level of resistance. But we now have two roadblocks to get ahead of to see any further highs. And this candle pattern and structure does not look good over what happened in the weekend. And so once again, I said this yesterday, it was a very tough short for Bitcoin. It was a lot easier to short Ethereum. We took the Ethereum short at 39.59. Bitcoin was an extremely hard short. And at this point right now, we have to wait for confirmation of whether this is going to start coming to the downside to then start shorting these other levels. For the day traders, of course, for the swing traders, cash is a position if we start to see this breakdown. So I think that if 47,000 can't hold and we start to see price action below 46,000, first we come down where we've already come down to test this 50-day moving average around 3,000. You knock on the door a second time, the likelihood of us coming down further becomes highly likely. And then we do have that previous monthly open, remember, at 2,500-ish. That could act as a new level of support that would be created. But at this point, the range of Ethereum, because we've seen so much volatility in this range, is 1980 to 3454. It's nothing in between. And so that's just the reason we move through these ranges so swiftly, like as if it's a butter knife. And so with the Ethereum to Bitcoin chart, this is what's going to give us a little bit more hints as to what's happening. And so what we have to monitor here is this weekly open. And if we stay below this weekly open, which is sitting right at this $76,300 or 76,300 Satoshi level, then we could assume that we're going to see some weakness here to potentially come back to test 65,000 Satoshis. We get above the 76,000 Satoshi area where we have this weekly open. That would be interesting for the Ethereum to Bitcoin chart, because now we can start seeing how this Bitcoin dominance is going to start playing its part with this market in this next move. And so, so I wouldn't say we have full confirmation that altcoin season is going to see a slowdown just yet. I think we really need to wait for Bitcoin to make that decision from 47,000 to 46,000, because if it moves up from 47,000, we could be in for a higher high. So that's the important thing to keep in mind there. And so that means we might be a little bit premature with that opinion. And if Bitcoin dominance may actually come down, see some further lows, but we have to realize it's so correlated to this DXY chart. And, and the DXY is pushing up. It has double bottomed and it looks like it wants to push up. And so if the correlation is true, then it assumes Bitcoin dominance pushes up. And the problem with that is I would only see Bitcoin dominance pushing up with price of the markets in cryptocurrency world coming down, because there has to be a reason for that, right? Gold, by the way, hasn't done anything significant testing the previous weekly open. We can still assume this bullish, breaking the structural resistance already. And so this could be the final opportunity for people to get into gold. We want to watch that. If gold starts to come down, it shows more confidence in traditional assets and potentially more risk on assets like altcoins and Bitcoin, of course. And if we see gold move up, it shows more fear that people want to move their money into more stable assets. And so with the US oil also sort of looking like a top here, we just have to be a little bit careful here when it comes to watching commodities to see the reaction of other markets. Japan is moving up. It's breaking out of this flag here, which is very interesting to see. So traditional markets are doing well outside in Asia, it looks like, and then we come into the CSI 300. Looks like it's in the premature phases of a move similar. S&P 500 still sitting at highs. And so I'd say what we're seeing in traditional markets now is not a reaction to the DXY just yet. And I think that's buying us a lot of time in the crypto market. If we start to see the S&P 500, which is the largest traditional market, react to the DXY, this would be another confirmation that Bitcoin is going to start to react to the DXY. We see continued strength for the S&P 500. That's exactly what we want for Bitcoin, assuming a healthy environment outside of Bitcoin. So, man, 23 minutes on this video. Thank you all for tuning in today. I hope you enjoyed our in-depth analysis, and it's going to be very interesting to see how Bitcoin reacts to this $46,000 to $47,000 range. And with that, thank you all for tuning in today. Until next time, Snipers out.